Welcome to the January 21st, 2022 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week on Thursday night, this video replaces the written commentary portion of our nightly report. Hopefully, the video serves as a nice change of pace and offers some insight as to how we set up our charts, timeframes, and indicators. As you can see, we try to keep it pretty simple. We have the 10 and 20 day moving average of 50, 100, and 200. Usually we don't have the 100 up, as in a bull market. Most of the time we're dealing with the 10, 20, and the 50. We also have a relative strength line versus the S&P 500, and then we have volume and a moving average of volume. That's pretty much it. We believe that price action is king, volume is secondary, and we use moving averages to help guide our entry and exits. So let's get to the charts. First up is the NASDAQ Composite, which generated a sell signal in our timing model when it broke down below the 20 and 50-day MA on January 5th. And since then, it's just really been hit hard with an A, B, C correction. And this A wave down here is about 8%. And so this C wave should equal the A, which it will around this 14,000 area. And so the price undercut the prior low, which is what we want to look for during a sell-off. So, we could see a bottom somewhere around this 14,000 area. And, it's not a prediction. It's just something we're looking at as a guide. Also keep in mind that the NASDAQ is pretty far extended from the 20 EMA. So again, looking for support in this 14,000 area to hold up. And it's a big round number as well. And the S&P 500 finally broke the 100-day EMA and could possibly close below the 20-week EMA for the first time since the rally began back in 2020. And if it closes below the 20 EMA this week, will be a change of character. On the daily chart, the timing model for the S&P is on a sell signal after breaking down below the 20 and 50-day MAs on 113. Like the NASDAQ, it's had an ABC-like pullback here. Wave A was almost 5%. Wave B is the counter trend move, and then wave C here is the now past 5%. So this was the target area around 4,500. Which was also beneath the prior swing low. But as mentioned in last night's report, it looks like the S&P 500 is headed for the 200-day MA on the daily chart, which is at 44.27, so or about 1.2% lower. And if it touches the 200 without a bounce, that would put it well below the 20 EMA. So another reason to expect some sort of bounce at that point. And let's just run through a few other major indices here real quick. The NASDAQ 100 undercut the 200 MA. The Dow sliced through the 200. If it's unable to reverse, then we'd also look for a test of this prior low. IWM is just really ugly and getting smoked below a year's worth of lows, so a big trading range has been broken. IWP is growth, and it's just getting hammered. Growth is really taking a beating the past few months, is in a full-on bear market. FFTY, another growth ETF, also down more than 20%. And ARK, which has been taking a beating all through 2021, that is now about 50% off its highs. So just an ugly market for growth. However, bear markets are necessary as they cleanse out all the excess. And eventually, when they bottom out, new bullish patterns emerge, new leadership emerges, and it's a whole new ball game. And there's potential for big gains once again. Prior to this happening, we're looking at a market with the same 15, 20 growth stocks for the past year and a half, and Some of these stocks were up several 100% during that time, and it's tough for those stocks to push much higher. And so let this bear market do its thing, reset some patterns, and down the road when this market starts to bottom out, we could see some good times ahead. In terms of open positions, really, there's nothing going on. We're 100% in cash. When the market did bounce, we sold Microsoft short for a quick gain. We also sold 5-inch short for a quick, 4 to 5% move. And in the newsletter, if anyone checks the unofficial entries, we did have a few that have recently done really well. We had ON was in the report as a breakdown below the 50-day MA and the prior day's low on Wednesday. But that was more of like a tactical day trade type entry where we're looking for a quick sell-off. And this type of market, once you see this type of sell-off, you want to take at least half the position off and let the rest ride with the break-even stop, or maybe even using the 20 EMA on the hourly. You don't want to get too greedy on the short side. MU was also on the list below the 20-day EMA. This was on Wednesday's list with we're looking for a break of the prior day's low and the 20-day EMA. Also, unofficially, Tesla was mentioned as a short beneath the 2-day low, which triggered on Wednesday. In the live trading room, we actually called out a short entry closer to the 10-day MA after the price stalled at the 50. And again on Thursday in the live trading room, we called out a short Tesla around this 1024 area. Again, these are not official short entries in the newsletter, as these tend to be quicker trades. If we're shorting around 1024 and if the price were to shoot up through the day's high, we're out. That's that sort of trade. Netflix reported after the market, and I believe it was hammered, yes. So it closed at 405 in after hours trading, which is all the way down here, and 20% down, which is a brutal gap down below all the support here. So that's probably going to lead to an ugly open. Beyond that, though, it's going to be tough to establish new shorts from here because, as I mentioned earlier, we're going to be undercutting the 200 AMA, undercutting prior swing lows, and the price action is pretty extended from the 20 EMA on the daily charts of several broad market averages. So typically not an ideal spot to start shorting. But there are a few short setups that we did spot. These are almost day trades really, and if they work out, you can hold them overnight, but you want to make sure that you're up at least 3 to 5% or more. First up is BMBL. Nasty break beneath prior lows, and it's basically forming a ledge here, which is just like the opposite of a flat base really. A flat base being a tight range consolidation at the highs. Call a ledge here a tight range consolidation at the lows. And with Bumblebee trading in a tight range here with basically 2 inside days, and the 10-day slanting lower. The price were to break the 3-day low, we'd look for a sharp sell-off with a stop above Thursday's high. ZIM would be an example of a day trade short. We're looking to short a strong stock that's breaking down, so beneath the 3-day low and the 10-day MA. Okta, here's the consolidation after breaking down below support. Stalled at the 20, and this is probably the most ideal short entry up here, well above the swing low. It did stall at the 20 again and close below the 10, so if the price were to break this 200 level, could be shorted back down to this prior low. Maybe cover half the position here and then let the rest ride. Schwab is a pretty strong financial stock, but a ton of financials have been hit hard the past few days. We'd look to short Schwab, just looking for a really quick breakdown. if it takes out the 2-day low, and this is an inside day here, really tight ranged one, so could see a nasty breakdown beneath 90.80, possibly to fill this gap to 85. So once again, I just want to say that these are very late to the party short setups. If traded, they should be viewed as day trades for aggressive swing traders only. The rest of us can just sit in cash and wait for the market to either bounce and possibly present us with some lower risk short setups, or attempt to bottom out and put in a follow through day and see what kind of longs develop. But that's where we're at right now. All right, so that's a wrap for tonight's video. Thanks for joining me. We'll see you again next week. Have a great weekend.